I think let's start with the fixed income market reaction to the 50 basis point hike. How have yields performed on the market post this decision by Sanusi on Monday?
Good morning. Yields have not really reacted as you would have expected, despite the 50 basis point hike by the MPC committee. What we actually observed has been the reverse in terms of yields on the 3- and 5-year FGM bonds dropping in the secondary market. Whilst those moves have not been significant, less than 10 basis points for the 3-year, a little above that for the 5-year instrument, it still definitely goes counter to what you would have expected, really, from the 50 basis point hike by the MPC committee. And that just goes sort of to buttress what we already sort of thought as pertains to the effectiveness, actually, of the rate hikes by the MPC committee. Over time, we've been in tightening mode for the better part of this year, and to be honest, we've seen very limited impact both in the fixed income space as well as within the equity market space, which sort of gives you some concerns as to how effective the transmission mechanism of those rate hikes are.
Yeah, and of course there is the risk aversion, which could be also playing into the market, which is very liquid, one of the most liquid bourses, of course, in Africa. Let's take a look at the banking sector. A lot of activity around mid-tier banks yesterday. Access Bank, one of the day's top movers. FCMB rising 3.1%. We've got shareholder meetings ahead of the end of September recapitalization deadline next week. Do you expect any bumps in the road for management of the emerging banks looking for shareholder approval?
We don't envisage much problem on that front. Again, a bit paradoxically, you'd have expected the rate hike to have a negative impact on the equity market as well. But yesterday we had a 0.3% rise, partly fueled by some banking stocks that you have mentioned. And what's becoming increasingly clear is that the discounts on a lot of those banking stocks in terms of fundamental valuation has just increased with the sort of poor performance that we've seen recently. So what we're really looking at is for this round of shareholder approvals expected next week to sort of provide some form of impetus. It would seem as if the rate hike is basically a prod to ensure that shareholders don't get funny or begin to sort of scuttle sort of progress that's been made so far. So what we're really expecting to see is a situation in which banking stocks have come up significantly in terms of price, a situation in which in terms of earnings fundamentals they remain really sound, especially with further cleanups being engineered by the CBN. And then a situation in which we now have the third leg of that tripod being supported by shareholder approvals coming through going into next week. I think as far as those meetings go, it will be very difficult to expect any shareholder group to dissent given what sort of environment we have right now. The likely response I would like to see from the rate hike is probably going to be more evident on interbank rates. And so those smaller banks and those rescued banks have a bit of concern on that front. Their best bet at this point in time appears to be to support the process that's been laid out by the CBN as well as their acquirers.
You say that it could have an effect on earnings going forward, but in the next week or so, you're anticipating perhaps some activity around the merging entities, bank stocks. Which stocks would you be taking a position on ahead of those shareholder meetings?
For a number of them, there are not enough details yet about the transaction to take sort of a clear view on how exactly it's going to be structured. We have some sort of color on what we expect from ETI and the Shonic, a bit of detail as well as per Access and Intercontinental Bank. But on a broad level, what it seems to be is that given the critical role that AMCON has played, it appears that the acquirers are getting very good deals, almost all of them. But I think one bit you have to look at then is the sort of earnings negative earnings potential really for some of the subsidiaries they're acquiring. Whilst the deals broadly look fundamentally sound in terms of the transaction rationale and synergies, we think that there would be a lag in sort of bringing those potential synergies into reality. For a number of them, we don't envisage that to come into fruition any earlier than 12 to 24 months, and in that process, I think we're just adopting a wait and see approach on those acquiring banks, really.